Good morning and welcome to Join the Dots. This should be coming to you on Tuesday. So you had a fantastic presentation yesterday which I gave you on David Eisman and Eurodollar University and how they were seeing things that to me are obvious. Okay, to me are obvious. That the economy is cracking like a post-crash and we haven't even had the crash yet. And this is really a symbol of K, the letter K. We are seeing a K-shaped economy, and this is incredibly dangerous because it's very socially divisive. Very socially divisive. What it means is the K there. You've got the straight line, you've got the K. The top line, I'll probably do it that way for you. The top line is how the rich are performing, and the bottom line is how the poorest are performing. So it's not a recovery, is it? It's just a K-shaped economy. The rich are getting richer, the poor are getting poor. We all know it, we all see it, okay? The only thing that stopped us revolting is that property has gone up. And in most countries, not in America it's the stock market, but it's also property. The property is what keeps the middle class at least able to feed themselves. But if property falls, they're in real trouble. Now, I promised you a property special this week, and I will put one together. It's not been easy over the weekend. There wasn't too much. There was a good one out of the UK, which shows that property prices fell 1.8% in November. And again, think about it. Those are numbers you only see after a crash. 1.8% in 1 month, reported in The Guardian. Okay? Those are numbers you only see after a crash, not before a crash. So the crash is a silent one. And of course, as I say, the rich are getting richer, I'll do it that way, and the poor are getting poorer. So the K is the shape of the economy. Now, again, I'll tell you, Greg Manarino saw this a year ago, and he's been on and on and on about the middle class being hollowed out. And of course, we saw it in COVID. We saw it with lockdowns, didn't we? Because the 6-foot social distancing, which came from nowhere, Fauci said he didn't know where it came from. No one knew where it came from. It wasn't the right way to protect against the virus and how the virus spread, as all the doctors will tell you. Well, those who think. So who came up with the 6 foot? Well, corporate fascism. The big boys came up with it because it killed the small shops. It killed the small businesses. Destroyed them. K-shaped economy. Okay, now, what have we got here? We've also got, I've said to you before, and I'm going to do a little bit of a smorgasbord today because I haven't got a main story, although I will come on to one. And I'm going to talk about lots of things. And we talk about Trump. And I see in the comments, and I see from what I see, that Trump could well be, while he's got some good intentions and while he's got some good policies, he's also controlled in some shape or form and appears to be possibly the second wing of the same bird. So, and you only have to look at the big issues, don't you? Where's Epstein? Okay, where is it? Where's the gold audit? And where are the $2,000 checks that he promised only 2 weeks ago? Where are they? Besant now says that has to go to Congress. So an empty promise, really, because he couldn't deliver. He couldn't deliver Epstein. He couldn't deliver the gold audit. They couldn't deliver Elon Musk's Doshi results, could they? They couldn't deliver any of them, but they shouted about them. I'm not being critical of Trump. I'm just saying those are facts. Those are the economic facts. Okay. So the rich are doing well, the poor are getting worse, and the middle class are just getting smashed. But the middle class are hanging on because of property. If that falls, then we've got a new ball game, and it's going to fall, in my view. It's going to fall 50% is where I see it, because that's how much it's overvalued, given the future economics, given the future earnings potential, given the future employment potential, given the future, then property's going to fall. And given liquidity. Liquidity is drying up everywhere. We go back to private credit again, don't we? What did we see? Blue Owl, private credit. Emerging funds. Now, I talk about accounting policies. Here we go again. They're merging funds. They're hiding the truth. Companies who grew up in the late 80s when I was working in the city for Credit Suisse, they were making massive acquisitions. Why? Because in acquisition accounting, you can hide everything. You got a problem, simply buy a company, okay? Play with the accounts. You lose all sorts of expenses and costs, and you gain all sorts of profits that aren't really there, but you can do it under accounting policies. So Blue Owl are merging some funds and during which people are going to lose 20%. US bankruptcies have hit a 15-year high. Here we go. Before the crash. A 15-year high, bankruptcies, before the crash. Okay? Remember what Eisman said? Remember what Eurodollar University said in Sunday's show, or Monday's show, I think it was. So I'm going to come on to the big story. The big story has to be China. And it's always China, isn't it? Because it's the second biggest economy and it's a complete fake economy. Okay? And it's a fake economy looking forwards. Okay, looking forwards. Its housing market has been in a slump for 5 years and they've lost probably 30 trillion in value from 62, as Goldman said, down to maybe 30. Okay, there's 30 trillion gone. That's what, 2.5 years GDP of China gone in value, in wealth. Consumption is therefore falling because the middle class can't spend as much because they haven't got the property wealth. Okay, and those who've got 2 or 3 properties, which again was the thing to do, wasn't it? Everyone buy property, buy property. No, it doesn't matter if anyone wants a home. We want to make money, we want to make a yield, we want to buy property investment all over the place, real estate agents all over the place. Everyone buying property to deny people a home. That's the consequence. That is the sad consequence. And that's what's happening. But now we're going to see the revenge. Well, not really the revenge, because the poor aren't going to get any better out of it. But certainly that group who have absolutely flooded the property market. What was it now? I think it was 40% in Australia or something, our investment properties. They're going to get their comeuppance because they're going to get smashed as liquidity dries through the system. Systemic liquidity. And that's what, when I was in Dubai 08 and I called a 70% fall in the market when it was still rising. This was in June 08, before anything had happened. I said it would fall 70%. And within 9 months, I was proven right. You have to be able to see these things, not just read the old media news. Because it's not news, it's corrupted. Everything's corrupted. Anyway, China, let's talk about China, because this is huge. It's a huge story. China has summoned the Japanese ambassador over a spat. Now, I'm going to tell you how reverse this is, okay? So China has summoned the Japanese ambassador, yet it was the Consul General, or the Consulate General of China in Tokyo that said of the new Japanese Prime Minister, he said, I quote, that filthy neck that barged in on its own. We have no choice but to cut it off without a moment's hesitation. Are you ready? End of quote. That is what the Consul General in Tokyo said of the newly elected Prime Minister of Japan. Are you thinking about that? That filthy neck that barged in on its own, we have no choice but to cut it off without a moment's hesitation. And then the reaction to that, which was pretty angry, meant China summoned the Japanese ambassador in Beijing. Can you just see it? Please tell me you can see it. That is in Lay's Real Talk, and it's in the first 5 or 6 minutes, okay? So I'm going to link that. I'm going to link Lay's Real Talk. Watch it. Please watch it. Because these words you just can't believe were said. But they were. About a Prime Minister. So, does it ring a bell with the BBC and Trump? Yes, it does. Can you see this war through the captured media? It's disgraceful, it's disgusting, it's symptomatic of crises everywhere. Now, China is also at the same time looking very much like Japan 1989 with the market. The stock market is still rising at the moment, but it's way below where it was in mid-2010s, and it's way below where it was in 2020. So although they always hype about the market, have a look at the graph. I'm going to link it. I'm going to link you the Chinese stock market graph, and I'm going to link you the Japanese graph, which goes back to about 1970. And you can see the similarity in the boom and then the crash. Now, China is still going through it, so it's early days. It may come back a bit, but it has the same destination as the Japanese chart, massively down, okay? And it took 30 years for Japan to recover. Now the difference this time, which is a dangerous phrase to utter, but the difference this time is that while Japan had its recovery during a period when the whole world was growing massively, particularly China next door, which meant it fed off China, fed off the new Chinese demand that was being created. China is going into this with no world to support it. And just to back that up, what happened at the weekend? The EU are now banning all the Huawei and another Chinese supplier in their telecom systems. And the EU are saying that they must, Germany particularly, are saying they must reduce their dependence upon Chinese imports. And so is Tesla now. Tesla is saying they want to remove all Chinese sourced products from their vehicle ranges. Look it up. Look it up. So, as I keep saying to you, I try and see things looking forwards, not the data that you're told from the past, which is irrelevant because it's happened. I'm looking forwards. China's property market has collapsed, maybe 50%, maybe 30 trillion, wiped out. Its consumption is struggling, partly because of that property collapse, partly because people haven't got the money, partly because jobs are going, partly because the liquidity is drying up within companies, partly because companies can't make a profit now. What did we see? 25% of their PLCs are losing money. Losing money, okay? Losing money, 25% of their companies. And now the third leg of their stool, exports, EU are threatening them. America are threatening them. Other companies are threatening them. Okay? So China is going to go into its crash, its crisis, its massive expansion ending. Unlike Japan, it's going to go into it with a very unfriendly environment facing it, with a general worldwide slowdown, and with no friends other than, what, North Korea, Venezuela, and a rag bag of countries who you probably prefer not to live there. So what we're going to see is the Chinese are now trying to internationalize the yuan because they are going into the same crisis that Japan faced. So they need to do, here we come, the carry trade. They are trying to internationalize the yuan so that they can create a Chinese carry trade where people can borrow the yuan. The 30-year rate today is 2.0 something, and the 10-year rate is 1.8. Compare it to the West. Okay? So if they can internationalize the yuan, people will start to use the carry trade in the yuan. That's what and they need it. It's not they want it. They desperately need it now because they need this international buy-in, and they haven't got it. They've upset just about everyone in the world, haven't they? Other than North Korea, Venezuela, Cuba, and a few others. Okay? And look at those words. I'm going to say them again. I'm going to say those words of the Chinese Consul General in Tokyo about the Japanese Prime Minister. That filthy neck that barged in on its own, we have no choice but to cut it off without a moment's hesitation. Are you ready? Those were his words. Think about it. Thank you very much.